Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, Algeria. For months, the mantra has been repeated. Our reserves of foreign exchange will shield us from lower oil prices. But is that argument starting to wear thin? We look at Algeria's economy beyond black gold. Also this week, Saudi Arabia and its own resource problems. It's not oil, but a lack of water that's turning what was once the world's largest wheat exporter into a country dependent on imports to meet its needs. And one of the biggest corporate mergers ever. But we'll tell you why some are unhappy about the planned tie-up between drugs giants Pfizer and Allergan. We sometimes like to take you to places you haven't heard much about before. This is one of those weeks on Counting the Cost. Algeria is our focus, a North African country, the world's sixth largest natural gas exporter and a member of the oil-producing cartel OPEC, which these days is not the greatest club to be a part of. Just like other oil-producing countries, think Nigeria, think Venezuela, Algeria has been badly hit by the collapse in oil prices we've seen this year. And hydrocarbons basically are the Algerian economy. 97% of the country's exports come from the sector. So the government responded with a 9% spending cut in next year's budget, while at the same time ring-fencing the politically sensitive stuff, housing, free healthcare, education, things which cost the government $60 billion in subsidies every year. So yes, a budget cut's probably a step in the right direction for now, but Algeria still depends on oil revenues and has mostly failed to diversify its income into other sectors like tourism and agriculture. So let's take a look at the scale of the problem, because with more than 60% of annual revenues coming from oil and gas exports, and with prices still falling, Algeria's central bank only expects them to bring in $34 billion this year, down from $68 billion last year. The bank has also allowed the currency, the dinar, to sink to a record low against the US dollar. It's hoped that will curb imports, which are expected to reach $57.3 billion this year, which exceeds exports by their widest margin ever. Unemployment is an issue too, 11.9% next year according to the IMF, and youth unemployment's even worse. More than a quarter of those are out of work. And so to ease pressure, the IMF is urging Algeria's government to reduce its spending. Basic food items and petrol are of course heavily subsidised. Well, joining us from London to talk about all of this is Professor Mezyan Lasfar. He's a finance professor at the Cass Business School in London. Professor, thank you for joining us. The crux of our story, as we've outlined, is the energy market and the low prices, prices which must really be affecting Algeria and its whole economy. Tell us about that.
Yes, I think so. The problem with in fact, Algeria and also many other countries in the region is that they are too dependent on the oil, and that is a commodity that is freely traded in the markets. And what we teach our students is really you cannot put all your eggs in one basket. To a large extent, you need to diversify so that in case one export revenue goes down, the other one will be kept on or probably go up. So therefore, I think being dependent on just one particular commodity is very, very risky for any company, for any country, even for any individual. When you are just tilted towards one source of, for example, the revenue, then there is very high risk that you could lose quite a lot.
And look, the same could be said of many other countries. You think about any of the Gulf states, for example, which are so reliant on oil. But what has Algeria done to diversify? What has it got? Well, has it got anything else really other than oil?
Well, unfortunately, at this stage, we didn't really see too much, first of all, because of lack of data, but more importantly, because of the lack of production. I think we've got huge potentials for tourism, so we've got huge potentials for other industries and also services. I mean, we could get some, for example, call centers like our neighbors who are doing, and that really obviously it might be small at the beginning, but it has got a very large potentials. But I think that tourism is probably one factor one industry that could be developed quite substantially, because we've got a huge desert, we've got mountains, we've got the seaside, we've got everything there, but that is unfortunately not developed. And again, relating it to number of companies, in general, we say that when companies diversify, it's not good to go outside of their mainstream, but this is different. This is a country, we're talking about countries that have got large potentials. And any country that you look at the world, in particular the UK, where we live in, we've got lots of data. It's not too much tilted towards just one particular sector. I mean, we've got the tourism that is working very well. We've got education that is going very well. We've got services like investment banking, the legal companies, etc. So all those, they form a really very big country, and diversified activities that the UK economy is not relying on just one particular one. In case, for example, like we saw the financial crisis, the banking sector went down quite substantially, but the other sectors were doing well. For example, for us at the university, we're really getting lots of many students, and all those students were bringing lots of income.
So does all of this make you worry then about Algeria's future? All this talk of a lack of diversification, a lack of data, a lack of development in things like infrastructure and tourism. It is not painting a very good picture for the future, really.
Well, no, I think the country itself has got a very big future, in the sense that it's more probably what we could do about the economy, in the sense that what we refer to a lot in our teaching is leadership. In any company, I teach more companies rather than what countries do. So from a microeconomic perspective, leadership is very critical. Those opportunities and the strength and obviously the weaknesses are still in any country that you look at. It's not only Algeria, but in particular in Algeria, I think we've got very strong opportunities there, given that the geographical position of the country, the size of the country being the largest in Africa with lots of potentials, and also the human resources. When I go there and teach, I get really so excited because I find so many people. Sometimes I teach about 500 or 600 students in one room, and it's my pleasure because really you feel that those people are so interested in what I say, what I teach, and therefore they have very strong motivations. And I think that is a very strong asset. Human resources, education is very strong asset in particular in Algeria.
Yeah, you know, when I think back to 2011, when we saw so many huge changes in the Arab world and North Africa and the Middle East, a lot of it was about young people who didn't see a future, wasn't it? You know, these were the people who didn't have a job. They simply wanted to live and work in their own country, but they couldn't. They wanted to make it strong and they couldn't do that. Do you feel that Algeria has learnt from that and it's got the right ideas to move itself forward, especially for its youth? You know, you're talking about the people you're teaching who are young and energised and willing to learn. What about everyone else?
Well, unfortunately, I'm not really expert in the area, but from what I've seen from the outside, I think it has been always a problem in the country, in the sense that the youngsters, and that's why I'm here, because I couldn't find really so many opportunities in my country. I could have been in my country and teach there and work there, but the job prospects are very small, and therefore it seems that the youngsters are there. They are really eager to set up their own companies, to work hard, to prosper, and to be like anybody else. I mean, all what they ask is something to be really legitimate, in the sense that they want to have some freedom to create and to prosper. But unfortunately, there are, I mean, many statistics indicate that, for example, for creating a company, the country is not very open. I mean, it is amongst the lowest one in terms of the time that it takes and in terms of facilities that the country offers. I mean, mainly the government and the banks offer for creating companies. I think if those the kind of institutions are learning from other countries how to manage this vibrant population, young population that is eager to create companies and to diversify a little bit more from the oil from the oil exports, I think the potentials are there, and they are quite substantial.
That is Professor Mezian Lasfar talking Algeria with us this week on Counting the Cost. Thank you. And still ahead on Counting the Cost, this logo. You probably don't know what it means, and, well, frankly, neither do most of the residents of the South Korean capital. But that may just be the point. We'll explore it a little later on. Now to the Middle East, where the wells are running dry. No, not the oil wells, though that may be a concern eventually, but the water wells in Saudi Arabia. This is a major problem for a country that was the region's biggest exporter of wheat. It got there by using the huge underground reservoirs of water known as aquifers to feed the crops. These are the things that sometimes look like alien crop circles or something. Most of them, as you see on the map, are in the north around Tabuk. Now, these aquifers don't exactly refill. In fact, the last time they were replenished was after the last ice age, 10,000 years ago. Saudi Arabia's agriculture minister confirmed last year the kingdom will rely entirely on imported wheat from 2016, meaning it joins the club of nations that, according to the commodity traders' adage, sells hydrocarbons to buy carbohydrates. Here are the numbers to tell the story. Saudi Arabia was among the top 10 wheat exporters. It produced 4.1 million tonnes annually in the 1990s and was self-sufficient in production. Now, though, the Saudi government says it will meet its entire domestic demand by importing 3.5 million tonnes of wheat next year, which is expected to rise to 4.5 million tonnes by 2025, turning Saudi Arabia into one of the 10 biggest wheat buyers worldwide. Our go-to analyst for all things Saudi Arabia is John Sfakianakis, the GCC director for the Ashmore Group. So let's go to him now. He is in Athens this week. John, we have talked to you a lot about Saudi Arabia in the past, but this is something completely different. Usually we're talking oil or politics or defense or something. This time it's wheat. How has it gotten to the stage where Saudi Arabia will be importing all its wheat? How did it get this bad?
I actually do not believe that it's bad. I think it's very good. A lot of people, including myself, have been calling for a change in policy. That is, from becoming a producer and a net exporter of wheat to becoming a net importer. The reason for that is Saudi Arabia will be saving a lot of its water for its people. And these are deep aquifers that cannot be replenished. So it's the right thing to be doing.
But from an economic standpoint, it obviously has its drawbacks. You would much rather be exporting and bringing in money rather than paying to bring things in.
Well, Saudi Arabia is in a difficult situation because it has very little water and it has a lot of domestic needs for food. More than 90% of its food is imported. And it's very difficult for any Gulf country to be self-sufficient in food. So Saudi Arabia has a trade-off. It either produces food and it depletes its water, or it imports food and it has more water for the future generation.
Okay. What about the impact on the rest of the Gulf, though? Because basically Saudi Arabia was supplying wheat to the whole GCC region, wasn't it?
You're absolutely right. It did so since 1984. It was a net exporter of wheat to a lot of the neighboring countries, Kuwait, UAE, Oman, Yemen, Qatar, of course. But it made the right decision in 2008 to stop producing wheat, and by next year in 2016 it will be a net importer. It will import all of its wheat needs. So it was a trade-off. Do you make the farmers happy, or do you make your environment happy? So I think that environment being happy is a very good choice.
Yeah. John, something else that Saudi Arabia has chosen to do is to invest overseas and buy up farmland in places like the United States to grow the produce there and then, bring it back into Saudi Arabia for consumption. Is that, or are there potential geopolitical issues there with the Saudis buying up land that is not in their country and then not farming their own land at the same time?
You're right. There was a lot of concern back in 2008, 2009 when global food prices went up and there were food riots, and there was concern in the Gulf countries. What are we going to do about our food? Where are we going to import it? And how are we going to make consumers feel less the pain on their baskets? So the decision was to go and invest in farmland. In the case of Saudi Arabia, it took a bit of time, but actually they started investing in companies. And so since 2011, they have been investing in some of these companies that produce the food products, produce the wheat. So I think it's more correct to be investing in companies rather than to go out and buy farmland. That is more sensitive, politically sensitive, for some of the sub-Saharan African countries, to be precise.
Okay, let's just widen out a bit here, John, because if there is no wheat to sell, and if oil prices are going down, which they are, and if oil reserves are going down as well, which they are, tell us where Saudi Arabia's future economy really lies.
Well, the economic future is still bright. A lot of people have been looking at oil prices quite wisely and correctly, and they have been saying that since oil went from 100 to 50, there must be an impact. However, in the good days, Saudi Arabia invested a lot of its money and saved a lot of its money for a rainy day, a day like today. And I am very optimistic that Saudi Arabia has been able to save and will be able to weather the difficulties of low oil prices like the other countries in the Gulf. And I think give it some time, in 2 years from now, we will see commodity prices going up, and we will see also the domestic impact of wiser economic policies. What do I mean by that? Saudi Arabia invested in its youth, in its people. Human capital potential is great. We have better people today to be able to contribute to the economy. So over the long term, I think Saudi Arabia and as well the other Gulf countries will do quite well.
So you're talking about smart economic policies and, well, basically saving a bit of money and investing in the people. But what actual sectors and industries does Saudi Arabia have to offer? What are they? I mean, I think when people look at the kingdom, they just think oil, nothing more.
Absolutely. There is more to oil than just what we see in Saudi Arabia today or what we see in the rest of the Gulf. But let me be very direct. Services is an important sector. Tourism, religious tourism is another sector. Wholesale retail. Just wholesale and retail alone in Saudi Arabia can produce more than 700,000 jobs. And that's very important. And Saudi Arabia can produce certain of the goods that end up going into Africa. So it is the wider spectrum of the manufacturing, service-oriented economy that will create more value-added products over the next few years.
John Svakianakis on Saudi Arabia for us this week. John, always a pleasure to talk to you. Thank you.
Thank you.
Now, in nearby Iraq, there's a crop problem of a different sort. It's still because of a lack of water, but this appears to be a man-made problem. Imran Khan takes a look at that.
This field should be full of crops, but as far as the eye can see, nothing. The rivers that feed these fields have dried up. Nothing can grow here. Hadi Shawazi is a landowner and an environmentalist. He blames dam building in neighbouring Turkey for causing this crisis and says Iraq's powerless to stop the Turks after more than a decade of war, following the fall of Saddam Hussein and now the rise of ISIL.
These dams in Turkey and the lack of response from the government affected our crop. I'll give you an example. When we had the water, 30 acres of land would produce a ton of barley a year. Now that same 30 acres produce a kilo.
Farmers here have had to resort to digging large wells to find water for their fields, but it isn't enough, and they only have enough water to irrigate a third of this land. What the farmers are now doing is building wells like these. Now this is a costly and time-consuming business. They need to dig deep into the ground, between 30 and 150 meters, to get the kind of water, clean water, they need to be able to irrigate these lands. That's not only having an impact environmentally, but also economically. During the harvest season, thousands of people worked here. Now just a handful are employed. Across this region, unemployment has risen dramatically.
All the farmers here are desperate. I had to lay off 30 farmers who can't provide for their families. Now our markets are flooded with foreign products.
To keep up with demand, Iraq is now importing wheat and rice from the very country that built the dams, which are alleged to have caused the rivers to dry up in the first place. Turkish products are common in food markets. The collapse of Iraq's farming industry is concerning to many here. But given the other challenges Iraq faces, fixing the farming industry and negotiating international water treaties doesn't seem to be a priority.
A couple more stories to bring you this week. One from the United States involving the pharmaceutical giant Pfizer. It's signed a deal to buy up the European-based group Allergan, a $160 billion deal that'll be the largest pharmaceutical takeover in history. But there's a catch, the kind which never impresses the average taxpayer. Alan Fisher has our report on that.
It's the biggest deal of its kind, worth $160 billion.
We need to say, what life are we touching today and making better?
US-based Pfizer is taking over Botox maker Allergan.
From Allergan, a company with 60 years of eye care.
But the way the deal is structured, Ireland-based Allergan is technically buying the bigger company, and that allows it to be headquartered in Dublin, saving millions of dollars in corporate tax. It's known as an inversion.
Which is another way of saying that it's going to basically pay a lower tax rate in Ireland than in the United States presently, which will allow it to report higher quarterly earnings going forward. So this is really a deal about optimizing or minimizing corporate tax rates from Pfizer's perspective.
US President Barack Obama has in the past promised to close the loophole. He called it unpatriotic.
A small but growing group of big corporations are fleeing the country to get out of paying taxes. They're keeping most of their business inside the United States, but they're basically renouncing their citizenship and declaring that they're based someplace else just to avoid paying their fair share.
The tax rate for businesses in the US is 35%, one of the highest in the world. In Ireland, it will be just 15%. Pfizer's CEO insists this is still a good deal for the US.
It gives it greater growth, it gives it broader portfolio. It's a really strategic deal from that point of view. It enables us to incorporate Brent's open science, open development philosophy. We get overlap synergies, we get from overlaps, and there are benefits from tax.
Pfizer says it expects to complete the deal in the second half of next year, and it could generate $2 billion in savings in the first 3 years. It will create the world's biggest drug company in terms of sales. But the deal still needs approval by regulators in the US and Europe before it can be approved by shareholders.
Finally this week, a lesson in marketing and branding, courtesy of the South Korean capital, Seoul. There, they've chosen a new slogan for the city. It was decided by an online poll, which sounds all fair and democratic. Only the result is something nobody really understands. Here's Harry Fawcett to take up the story.
Seoul really looks better than on a beautiful late autumn day. Down there is a fascinating, energetic megacity, ripe for the exploring. But there's no Sydney Opera House, no Empire State. Identifying a Seoul brand has for years been a bit of a headache. So, this year the city government decided Seoul's new brand would be crowdsourced, the winner from thousands of submissions chosen by a panel of experts and a public vote. And this is it, I Seoul You. Proposed by a philosophy student, voted in by a wide margin, understood by few, and ridiculed by many, as a particularly awkward example of Konglish, the often meaning-free mashing up of English and Korean. Seoul's mayor says the very meaninglessness of the phrase could in fact be its strength, allowing it to last longer, to mean different things to different people, perhaps appealing even more to those whose first language isn't English. So we've come to one of Seoul's main tourist areas to see if here they Seoul, I Seoul You. So, just wondering, what do you make of that? Do you know what it means?
I saw you meaning I saw you. I don't know what's that supposed to be. I don't get. Is this a joke?
It's a good logo.
Happy. 優しい。なんて言えばいいんだ。Kind. Very kind.
Very kind. It's not hard to list Seoul's attractions. K-pop draws in the crowds from around Asia. There's a constant rotation of often spectacular outdoor festivals. The nightlife buzzes. The barbecues blaze. And it can sometimes feel like every second shopfront is a designer cafe. So does I Seoul You really sell all of this?
I mean, I came out on my Facebook feed and said, this is the dumbest thing. But then again, I started noticing that all my expat friends were sharing it, including myself, were sharing it left and right, and people were memeing it up, and it was going around. I think probably more than had it been just a decent slogan.
And the city government is getting in on the joke, launching a competition for the best I Seoul You parody. By producing a slogan that doesn't mean anything, they may just have stumbled on one that works.
And that is our show for this week, but there's more for you online at aljazeera.com/CTC. That'll take you straight to our page with individual reports, links and entire episodes for you to catch up on. You can also get in touch with us, tweet me at KamalAJE, and do use the hashtag AJCTC when you do, or just drop us an email. Counting the Cost at aljazeera.net is the address. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.